Hiring costs were elevated in December due to end-of-year seasonality. However, we do expect those costs to fall substantially in January as we head further into 2026. And it's a bit of the same story with driver intent. Their interest in finding new jobs was notably, but unsurprisingly muted in November and December, but that should tick back up now that we've entered the new year. We'll also dive into some driver polling from our friends over at Truckers News to see what drivers thought about 2025 and how they feel about the new year. And in addition to that, we'll touch base with Jason Miller for his latest economic update, which maybe, just maybe, might include some good news. And we'll cover more recruiting and freight data than you can shake a stick at. For Randall Reilly, I'm Joshua Miller, and this is a 30-Day Reset. Hello everyone, and welcome to the very first 30-Day Reset of 2026. We're back with all the latest data, and we'll dive right in just a minute. But first, if you're not already subscribed on YouTube, please take a moment and click that subscribe button as well as the bell so you never miss any of our new video content. If you like our show here, why don't you go ahead and like and share too. And don't forget, everything we cover today will be available to you for free. All you have to do is click the link down below for this month's download to get access to all the data we cover on the show, as well as even more stuff that we just don't have time to cover here on our video. All right, with all that out of the way, let's get to it. First up, trucking by the numbers, brought to you by Stratas. Google search traffic for truck driver jobs did inch up by 2% month over month in December, but even still, the search total remains quite low compared to historical trends, and the search activity was down 11% year over year. Average CPC rose 7% on search platforms and ended up hitting its highest level since April, while cost per clicks fell on social media and display. Social costs were down 4%, while display CPC fell by 11%. All of the final numbers for December weren't available while we were compiling all the data for this month's reset. We do expect December hiring costs to be higher, as they typically are. If you are watching this and you are a Stratas subscriber, you can access the latest data at any point in time through Stratas's See Marketing Costs page. Over on the freight side of things, overall loads and spot rates were both up year over year and down compared to 5-year averages. Loads were up 18% year over year and down 7% compared to that 5-year average, while spot rates increased 6% year over year while falling 4% when compared to the 5-year average. By the segment, dry van loads were up 5.6% year over year and spot rates increased 5% year over year. Refrigerated saw load volume drop 15% year over year while rates increased 10% year over year. And flatbed load volume surged 40% year over year while the rates increased by 7% year over year. For a more detailed breakdown of all the rates and load volumes, as well as full numbers and charts on costs and trends, you can refer to this month's 30-Day Reset download, which is available down below. Now let's take a look at this month's news story. So here we are, already a few weeks into a brand new year. But as we start the new year, it's always a good idea to take a look back at the last one. I mean, looking back to help us gain information and move forward is kind of what this whole show is built around. So with that in mind, what did drivers think about 2025? Well, our friends over at Truckers News asked them, and a few other things too. So let's dive into polling to see what they found. First up, when asked, how was your 2025? 23.56% said it was good. 20.99% said it was fair. 20.69% said it was poor. 14.37% said it was about the same as 2024. 9.77% said glad to see it gone. And only 8.05% said it was great. When we look back at the same polling data from Truckers News at the end of 2024, almost 45% said they thought 2025 would be a decent year, better than 2024. So, with the goods, fairs, and great responses, I guess we could say we were at least somewhere in the neighborhood of lining up with that outlook. Well, that covers what they thought about last year. But what do drivers think this year will be like? So, when asked, what are you expecting and hoping 2026 will be like, 36.26% said, same stuff, different year. 23.08% hope it's less tumultuous than 2025 has been. 18.68% said, new year, new opportunities. 8.79% just had no opinion either way, and 5.4% said, I can't wait for it to arrive. So a bit of a mixed bag there, to say the least. There is a few more wrinkles and questions to the Truckers News polling available if you'd like to take a look at that. I'll leave a link to the Truckers News site with the data below. And of course, as always, you can find all the data we cover, including this polling data and the new 30-day reset download, which will also be linked down below. Now let's check in for the first time of 2026 with our friend Jason Miller for his latest economic update.
Welcome everyone to our January market update. And we're starting 2026 with some good news for a change, and that is the fact that December saw a substantial tightening of the dry van truckload spot market. So data per DAT, we saw over a 20-cent per mile increase adjusting for fuel. And that is a very, very, very steep rise. Single largest month-over-month gain that we've had in more than 5 years. And so that is a welcome Christmas present to carriers. Not so much to brokers, though. Really did put their margins under pressure because DAT stayed on contract prices really didn't move that much. So we did trip over sort of the historical threshold that would be indicative of a market cycle changing. However, the caution that we need to keep in mind right now is that from a sort of, demand side indicators, we're still looking at quite a bit of softness as we move into 2026. So as an example, a new order purchasing manager index type of data, both from Institutes of Supply Management as well as the Federal Reserve Board that I combined together, shows that we're actually December 2025 was weaker new order momentum than December 2024. And as I've called out in the chart, January 2025 was very strong and very positive looking. But then we fell very sharply once we had all the economic policy uncertainty due to the tariffs. We're still in a period of very elevated policy uncertainty right now being compounded with concerns about Federal Reserve independence. And so just realize that on the manufacturing side, things are still not looking good. On the single-family housing side, huge catalyst for demand for not only flatbed, but also the dry van sector. Data through October that we have for single-family housing permits, which is the best predictor of starts, those are down about 9% from where they were in October of 2024. So they're hovering at a level similar to what we saw in 2018. So on an absolute basis, it certainly looks a lot better than, say, 2011, 2012. But on a comparative to last year basis, we're not doing as well. If we look at existing single-family home sales, they're still on an index basis, kind of almost 25 to 30% below where they were in 2019 or 2016 and 2017. And one of the big reasons for that is companies' hiring rate right now is quite slow at the moment. So companies right now are hiring at the same pace they did back in 2010 at the end of the global financial crisis as we were starting to come out. So what I tell everybody right now is we are cautiously optimistic about where truckload pricing could trend over the next several months, but it is way too early to call that we are in an expansionary market cycle. It's going to take about another 6 to 8 weeks towards the end of February to really get a sense for where things are at. So what I tell folks is just hold steady right now. Let's not get too far forward on our skis, because I know that there's this desire to declare that the next expansionary market is upon us. But I'd urge caution because those demand side indicators just really aren't flashing the type of green shoots we would like to see.
All righty. Thank you for that, Jason. We really appreciate it. And it's good to actually have at least a little bit of good news, some optimism for a change. But with that, we have come to the end of the January 2026 edition of the 30-Day Reset. We hope your year's off to a great start. If there's anything we can do to help it improve, let us know. Per usual, I've included links to Stratas, Stratas Agent, Contact Us links, a link to the Truckers News story, and of course a link to this month's full 30-Day Reset download in the description on YouTube or just down below the video player if you're watching us over on our Randall Reilly site. Now next month, we will be back with all the latest news and updates, news stories, all that kind of stuff. We might be a little bit later as Jason Miller, our economic guru there, is kind of holding out for some economic data that won't be released until probably the end of the first week of February. That is if the government stays open. Now, should the government shut down, we'll be back early because that data ain't gonna come out anyways, but fingers crossed. If they work stuff out and the government does not shut down, we'll wait on that important economic data so we can get you a full picture for our next 30-day reset. We'll be back, but until then, thanks for watching.